Your life, your term show.
So here we are. What is it? February? So we're 6 weeks into the year.
Mid-February.
Yeah. Inflation. Olympics.
Year's almost over.
Olympics have been on. Canada just won a hockey game. It was a close one.
Mm-hmm. Yeah, Mitch Marner. Wish he could do that for the Leafs. Go Mitchie. Yeah. Jeez. Yeah. Well, at least he does it for Team Canada, but I've never really seen him produce clutch like that for the Leafs.
50% of Leafs fans are cheering him on. 50% of Leafs fans are just swearing at him right now.
The way he left didn't sit well with me from the beginning. I think you remember me saying, I just didn't like the way he left. I think it was the first interview after he left, and he was like, it went towards the Toronto fans, and I was just like, oh, God, here we go.
I was never, I didn't dislike him. I was never a huge Marner. I mean, I'm not disputing his talent.
He's skilled.
No, but I'm just saying, like, for whatever reason, I was never just but I'm also not a huge fan of just guys like that. I like the B-level players, because I'm not a very good hockey player. I like the guys that do all the grunt work that don't get recognized. So like I'm always ready to give those guys credit. I'm like, hey, did you see what this guy did in the corner and see how he created the turnover that got that flashy goal? You know what I mean? So that's why I have nothing against Marner. He's a great player.
Sure.
But
whatever.
It just wasn't
don't like him at all.
No, I don't care. I don't like Nylander. I'm very vocal about that.
But I don't know.
I'm not a Nylander fan.
You don't have to be a fan of him, but he does produce in the playoffs. Not defensively, offensively.
Yeah. Yeah, but when you look at the points, I don't like when you look at the points per game numbers. They're actually all really similar. It's actually amazing. The Matthews, Nylander, what I mean.
He's producing. He doesn't go to zero or something. Like he produces.
Yeah, but you can't say that about Marner or Matthews either.
No, I think Nylander has in some series. I think he's the leading scorer. Yeah, you should look it up.
At one point I looked it up and I was surprised because at points per game they're all.
Yeah.
Anyways, points. We can look it up. Another
second assist, primary goal.
Yeah. I have no idea. Anyways, that'll get some people riled up. Some people will get.
You have a mental block when it comes to Nylander because he doesn't back check.
Yeah,
which he doesn't. He doesn't.
To me,
he scores the most beautiful goals.
To me, he's the Vince Carter of Toronto hockey.
Too easily.
So he was like Carter was an amazing player. Yeah. And when, from my understanding at that time, at least, what you would read about him was like there was just no real effort given to practice or anything else. Yeah. And the way Nylander plays, it seems like there's no effort to do the other stuff that's required. I don't know. What the heck do I know?
I don't know either.
I'm on my couch streaming at the TV. What the heck do I know?
I was in Yorkville one day with the family, and I did see him walk by with two dogs off leash that were really well trained. That impressed me in Yorkville. Because other people were distracting the dogs, and he would just look back at them. They would come right to him like, this guy's paid a lot for training these dogs. Then he went to one of the restaurants that was closed. He just walked to the door, and the door unlocked, and a hand came out and handed him a paper bag. And then I realized that was his game day, like lunch or late lunch, because there was a game that day, and it was the day that the Sportsnet put him on this. They had that subway picture of him, like taking the subway, and it was that day. So I had seen him in Yorkville. I'm like, this guy's living a great life. He's walking around Yorkville. His two dogs. He gets to the restaurant. They open it up, give him a meal prepackaged for him. There was no payment exchange from what I saw. I guess he has a tab at the restaurant. And then he's taking the subway to play hockey. You know, rolls into the arena. I guess if he's taking the subway, that means he walked through Union, walks into the Scotiabank Arena, gets dressed. Apparently he's like one of the last people to show up in the dressing room, gets dressed, goes out and plays the game. I mean, it's a pretty good life.
Yeah.
But if he back checked.
Well, here's the numbers. Look, Matthews. So I just looked at Matthews and Nylander in the playoffs.
Talk to me about goals.
Well, hold on. I'll tell you games played first. That matters. So 68 games played versus 67. So I'll call it the same. Nylander has 26 goals. Matthews has 26 goals. Wow, they're that close. And then Nylander has 32 assists, and Matthews has 33.
Yeah, that's what I mean. Nylander, he's producing like Austin Matthews.
Yeah. The only thing I'll say to that is Matthews typically goes against the top lines of the other team.
Sure.
Right. But I'm not knocking Nylander. I'm just saying. But I'm not, whatever. We'll move on from the Leafs. I didn't look up the Marner one, but when I looked that up, because for whatever reason, it always seems that way. And that's the argument. Everyone's like, well, no, Nylander's the only one that actually gets any points in the thing. I'm like, I don't know. It seems like, it seems kind of the same, but anyways. Okay, on to bigger news. I think the big thing that came out this week that a lot of people were talking about were the inflation numbers. Right, specifically the food inflation. So inflation came in at, I wrote it down, 2.3%. These were what? These were January numbers, right? Yeah, these were January numbers, I think. And then food inflation came in at 7.3%.
That's good.
Which everyone's feeling, like the 7.3. But what's bigger? I looked up beef. Last year, beef went up about 16%, and it's projected to go up another 5 to 7% this year.
Yeah.
So that'll be 20% over. If that happens, that's 20, which is very likely.
The fact that we have to talk about prices like this is just so ridiculous.
No, okay, but yeah. So let's bring it. Yeah, it's ridiculous. I agree. I mean, look. If the reality is, anyone that won't admit right now that the Canadian economy is broken, like they have their blinders on. Like for whatever reason, it's not hard.
I think it's almost the entire Western world. But
yeah.
Well,
let's talk. Yeah,
but Canada's actually probably at the bottom of the list
right now. In specific areas, inflation, food inflation, we're at the bottom of the list, like the top, because we're the highest. But our economy's struggling along. But a lot of people fail to admit that, and they don't see it. So everything's okay to them.
Well, because they just blame Trump. Like, it's like, we would be okay. A lot of people I speak to anyway, they're like, well, it's really not our fault. It's because of Trump. Mm-hmm. And I'll often just say, I don't really care. Let's just talk about Canada. And I guess the argument to that is, well, we can't really do much because the Americans have so much power that if Canada wants to build an oil refinery, for example, or wants to do something really productive, the US can kind of flex some muscle in a whole bunch of different ways and slow us down from making those decisions. That's what's countered to me when I say, you're right, but let's focus on Canada.
Yeah, and that drives me up the wall too, because
there is some validity to that.
No, but what I don't like about it is it just turns this argument into a political argument right away.
Yeah, like instead of just focusing on what we can do as a country.
Yeah, it becomes, well, no, this is about Trump versus Canada. I'm like,
stop.
Geez, man, not everything breaks. And first of all, it's bullshit. Okay, it's actually like, look, take beef as an example. Okay.
Also, Trump's only been in power for part of the time over the last 15 years where our GDP has not grown.
Yeah, 100%. Yeah. And I'm not even saying, look, if the same thing happened and the economy was in the same place, it doesn't matter what political party's in power in Canada, whether it was the Liberals or the Conservatives, or if they split the time. Yeah. It doesn't matter. It shouldn't be about like Liberal voters, some that I've spoken to, they immediately, when he's talking about this stuff, they get very defensive, thinking that it's like, well, no, it's not their fault. And I'm like, no, guys, not them, as like the voters, like the Liberal government. And I'm like, look, this isn't like let's just talk about facts. Yeah, let's not turn this into an emotional conversation.
We're too far gone.
About Liberals and Conservatives. Like, this is crazy.
Too far gone.
So, but the problem is that it's like, look, take beef as the example, okay? So the inflation rate that we've had in beef, we have Alberta, we have a lot of good beef in Canada, but you won't find a lot of it at the grocery stores here. You'll find, actually, what was it the other day?
Why did you see it in
There's
New Zealand?
cheaper beef being sold. Was it New Zealand?
It was. What was the deal with that?
Well, it's Canadian beef that's being shipped out there. I forget why. I looked into it, but I forget. But that's what's happening. And we're importing other beef, or, because it's still these
what's happening is, it was so weird, because you're telling me that Canadian beef is cheaper in New Zealand than we see here.
Yes.
But then I see Australian beef here
cheaper than Canadian beef.
It's just blowing my mind.
Stupidest thing ever.
I don't understand.
No, I know. And this is like, we're so backwards. And like, remember last year when the tariffs came in, everyone started talking, I shouldn't say everyone, but some of the different levels of government started talking these big games. Oh, here's what we're going to do. We're going to make all these changes. The first thing that everyone spoke about was the interprovincial trade barriers, how we're going to fix those. It's the same garbage. Yeah. Nothing's changed. The dairy management, nothing's changed. Why are eggs so expensive? Why is milk so expensive? Like, guys, we got to be doing something. But obviously, the focus is more on whatever those management systems provide, whoever they provide for, rather than the average Canadian who's going to the grocery store and trying to buy this food. Yeah. This is where the problem lies in everything. And this is what no one talks about, because immediately it becomes red versus blue, Canada versus Trump.
It's a great distraction.
It's like, it's the biggest level of bullshit.
The system's broken at the base level. So like, you can't even fix it. It doesn't matter who's in power. Like, the bottom line is, you need more debt to pay for the previous debt. Everything gets more inflated higher. M2 has been growing at 8.12% since 1973. 33 compounded, and then you get spikes in prices. So you got M2 inflating, which is the debasement of 8.12%. Then if more money flocks to things like beef, because more people want beef than other proteins, they inflate higher than 8%. It goes like to 12% or whatever if you smooth it out. And, you're getting higher than 8% inflation in prices.
Well, everything overshoots. We saw, real estate.
Well, some things, like the argument economists will make, well, technology is getting so good, the power of the computer that you're buying today is like 10 times better, and you're paying for,
but even
paying the same price for 10 times more.
Yeah, but even that, that applies to everything. I just mean everything will overshoot that monetary based growth, and even if you're getting better, it'll undershoot and come back to whatever the mean reversion, I guess. Because if you look at real estate over the last period of years, it overshot, and now it's back pretty much right.
Yeah, which
where
will
it
go
is
always
now.
around about 6.97%.
It's pretty much where it is on that long term trend over the last 10 years. So it had that huge spike where it was over exceeding. It was closer to about 8%. Now it's come back down. It's closer to that number. I just looked. I think the last 10 years actually it's lower than that. It's like it's low sixes, 6.1, 6.2.
It's always between 6 and 7,
something like that. Yeah. So, but that's just the last 10 years. When you're talking longer, which it is, and then so we overshot, and now we're kind of back to that trend line a little bit. So things will go, and we overshot because, I don't know, call it supply demand issue, right? You can call it whatever you want.
And dropping interest rate during the pandemic to like what were people getting 5 years at 1.99% from HSBC at one point?
Yeah, I think even lower, right?
0.99? I forget.
I don't know, but anyways, and then and real supply demand issues when we're letting all that population growth was coming in at that time and stuff. So it just kind of skews the incentive. But I guess what I was going to ask with this affordability stuff is, like, when we look at the affordability, you look at the current economic situation in Canada, which is poor. And it's hard to argue otherwise. Like anyone on the streets that I'm talking to, any business, people are squeezed.
No one's cheering and throwing money around now. Yeah.
So it's like, I'm just going to bring it back to real estate for a second. We can go anywhere, but is this really what's holding back the real estate transaction? I'm not talking about prices. I'm talking about just the activity in real estate that we're seeing, because it's dropped for a period of years now.
I think it's just a boom bust cycle. So confidence gets really high. So after the pandemic, when the rates came lower, and then the monthly carrying cost of housing comes down with that, people race into the market, they drive up the pricing, and then people see that, and it creates this feedback loop to me of confidence, where you're like, oh my gosh, that house down the street was this much last year, it's this much this year, we better get into the real estate game.
The FOMO
kicks in, and then all of a sudden you have this rate hike cycle that has gone on, and now we're back to the same carrying costs or whatever as now with the rate hikes rates a bit higher, but prices lower. We're at the same carrying cost of 2021, but transactions are like a quarter of 2021 transactions or whatever they are. So that tells me we're just dealing with human psychology now. Now it's just like, well, I don't know if I'm going to keep my job, or maybe prices will go lower. And not all economists, but many economists will argue that when you're trying to change human psychology, it's much more difficult than just making a change to interest rates and having the market react positively, because people have ingrained it in them now, like, oh, I don't know what's going on in the world. I don't know where prices are going to settle. Well, and you need more stimulus, more liquidity to change human psychology to get it from the negative back to the positive.
Yeah, I go back to COVID. I always look at that back to COVID. And I said, when the lockdowns happened, I'm like, okay, well, this is really easy, telling everyone to stay home. How are you going to tell them to come out of their house again?
Yeah.
And look how hard that was. How hard pushback that was.
And look at the stimulus it was required, because at first all the real estate froze up. Remember? But they did so much stimulus. Yeah. Remember, like, what was those programs? Everybody was getting monthly money that if you weren't working.
CERB was one.
CERB, like there was, and the rates dropped. Like there was literally so much liquidity flushing in that it just started. Yeah. And I think every time you have a slowdown now, it actually takes more and more stimulus to get the desired response.
So then let's talk about inflation, right? Because then the counter argument to this is like, well, guys, like, I get what you're saying, the economy is not doing well, but they can't do anything with interest rates. And I'm not just talking about real estate. I'm talking about just to spur the economy and to help people with carrying costs. And so there's extra money and kind of get the economy going. Because look, like food inflation, like look at, food, and the inflation's up. If they do that, inflation's going to go up, and it's a big problem.
Yeah, but they just changed their wording. Like, aren't they giving out another grocery rebate right now, or they're passing one? Remember, I just saw it the other day. I think.
Some people.
But they did that like 2 years ago. Do you remember there was a grocery rebate of some kind of thing?
No, that was they waived the HST on some grocery.
Yeah.
That's what just expired in January.
Okay,
And you know, at the time, people in that industry were saying why that would be ineffective was that what's going to happen is that the margins aren't going to get changed, and that's just going to hide the increase in food costs. And when you put that back, the increase in food costs are still there, and that's why we've had this high jump now, because that went back, that year-over-year numbers.
Yeah, and then to your question of like, well, when some people say, well, guys, they can't lower rates because inflation's already high, but they just talk out of both sides of their mouth, so they'll say that, but then they will print money out of thin air, which is inflating the money supply, and they'll give it out to people. And that literally inflates the money supply, which debases the purchasing power, which means you need more dollars to buy the beef. So like, yeah, they'll literally say, yeah, you know, we're the Bank of Canada, we have to be prudent. We can't raise interest rates.
So explain to me then, why don't they just leave it with, if I'm laughing because it's so stupid because their policies are so bad. But like, let's say they want the prices to come down. So if they don't do that, then prices, and they did anything that was like a half functioning human could figure out to try to help with supply changing and get prices down. You know, why isn't the focus put there? And I know you can't answer for other people, but like I'm just talking about the system, because like when you're looking, there's certain places where there's obvious supply chain issues. Maybe there's certain places where tariffs have impacted things, and there's a lot of places that haven't. And if you look at the actual some inflation numbers in some cases, the inflation isn't as high as they said they thought it was going to be. So food excluded for other reasons. But we were told that because of these tariffs, there was going to be sky high cost of everything. Like Canada was going to fall to his knees because
never work.
Trump's a terrible human being and he's going to crush us. And by now we should have been a bankrupt country, right? But it looks like the actual tariffs, the actual impact of the tariffs on Canada, the direct impact. I mean, like it seems like they're not as big as we
I do know some people in some sectors that have been devastated.
100%, but I'm not as big as it was being sold to us at the time.
I thought it was being sold as bad for America, that they couldn't put on the tariffs. It would be bad for them.
It was sold that way too.
Oh, okay.
Well, why wasn't it? It must be bad for Canada, because why were all the Canadians up in arms saying like we hate Trump, we hate America? We're like, why are people like I'm never going to set foot in America?
It doesn't even. Yeah, I don't know. But I think your question was like, what could they do? Like, what these prices? I think it's like we don't have a free market, so we have regulations to protect dairy in Quebec, and I think dairy in Ontario. And so when you have a system that there's, and I'm not just picking on dairy, we just have like. We don't have a true free market. Like there's HST on new home construction.
I think what I'm asking is what's their fear of prices coming down?
Oh, you can't have prices coming down would be deflationary. When you have a credit-based money system, you can't have prices come down because there's not enough money in the system to pay for all the previous debt.
So then why
you literally will default on the debt. So by way of example, if you have $1 in the economy and then it was borrowed into existence, and let's say 10% interest is owed, so you borrow the first dollar into the economy and $1.10 is owed back to the central bank. I'm generalizing here, but you can't pay the $1.10 back because only $1 exists. So you have to borrow another dollar. So now $2 exists in the economy, but $2.20 is owed back. Okay. If somehow prices started going down, you wouldn't have the money in the economy to pay back all the debt. So like if you pay back the debt, if you pay back the $2, the 20 cents is still outstanding and there's no more money in the economy. I'm grossly generalizing this, but that's why you can't have things come down, because you can't have the money. You can't have the money get smaller. It must always go larger to pay for all the interest.
Okay, so then if
it's like mathematical.
Gotcha. So if the economy is now slowing down, which it's slowed down a lot, and then why aren't we seeing that then reflective here? Do you know what I mean? Like if the equanomy's slow, why are we not seeing?
Because there's more. M2 still growing. The government's spending money somewhere. They're hiring people. Aren't we hiring a quadrillion public servants? Like we're still our debt. They did. Like the federal debt deficit is like $80 billion this year, double what the projections were. So the debasement of the currency is still going on. And when you debase the currency, you still have inflation. You're inflating the money supply. You're debasing the purchasing power. So the economy can be slow because the money is getting stuck in places where it doesn't really move. Mm-hmm. You're paying for, somebody's salary, and then they don't have the psychology and the confidence to go buy a home. So, they're plowing it into beef and groceries and that kind of stuff. The money flows there, but it's not spreading around. So you're not getting the housing inflation. So there's a million different intricacies to a complex economic system. But the bottom line is that they're still creating more money. So it's not being created with house lending as much anymore because less people are borrowing to buy houses, but it is being created still. We're running an $80 billion deficit, which means we're printing double what we were expected to print out of thin air.
So then the average Canadian that's paying rent or looking at their mortgage payment, then how does this impact them in 3, 5, 6 months? 6 months, 1 year, 2 years? What are they looking at here?
They're looking at take whatever you're making today, and if you don't compound it by 8.12% in your income growth at a minimum, because things are going up more than 8.12% that you want, like beef and stuff like that over several years, you're just falling behind. So in 3 or 5 years, if you take let's say,
and to be fair, beef might go up more this year. It might go up 8%.
Sure, it might go up less. It's not even. But let's say somebody's making $50,000 a year times 1.0812 or whatever. Yeah, 812. There we go. So in 1 year, they have to be making 54. In 2 years, they have to be making 58. In 3 years, they have to be making 63. In 4 years, 68. And in 5 years, 73. So somebody making $50,000 today, in 5 years, if they're not making $73,000 a year, then they're falling behind because of the debasement. Everything around them is going to be costing $73,000. What they used to be able to buy for 50 is now going to be costing 73. But their income didn't grow to match the 8.12% of debasement. Okay. So they're falling behind.
Yeah. Okay. So that sounds bad, right?
It is
then
bad.
Why? Yeah.
It's
no, I
shit.
gotcha. So then why, if that's the case, then why aren't more people I don't want to say talking about it, but why aren't more people feeling the effects of it? Or I guess I'm going to answer my own question, but I know they're feeling the effects of it. It's just seen in different ways. Do you know what I mean? But if that's really happening, because there's a lot of people wages aren't growing over the long term by that much. So
some people's are, I'm sure. But you're right.
In general,
on average, they're not. Yeah.
So where's that? Then what happens there? Do you know what I mean?
The economy starts slowing down. You get people who are going to use discretionary spending on jewelry. They're buying less jewelry. People on sporting events are buying less sporting events. There's still a good country singer comes to Toronto and it's the peak guy. The money's going to find there, But so it's not like this even thing. But if you take it on a whole, there's less discretionary money. I mean, everybody we're speaking to just has less liquid funds. They might have been using credit lines for the last few years to kind of get by, but now their liquidity is drying up a bit. And if this goes on a few more years, we have people who are like, oh, I might need to sell a couple rental properties that I wasn't planning to sell if this keeps up. So I think that's where it shows in the economy. You can last for a certain amount of time on credit.
And then is there a fire sale? And I shouldn't say a fire sale, but then you slowly see assets, the number of assets being sold take up?
I think so. I think you do. I think we're going to see that this year. I think some of the discussions we've had with some people are like, hey, I was waiting for prices to come back. Not sure they are going to come back. You know what? I'm going to need to sell it. So I don't think it's panic. It's definitely not what the headlines would make you see in the real estate market. When they take the peak sale of a geographic area of Toronto and they're like, oh, this guy got one. Some people did. Some people did. They bought it this crazy, and they're one-off examples. But in general, we know a lot of people who have fully paid off homes and not much debt to their, they're in their lives and that kind of stuff. And the real estate market has gone up so much. By way of example, we were buying rental properties in Hamilton in 2008 for $195,000, $205,000, $210,000. Those properties today have come down from, let's call it $850,000 to, I don't know, $700,000. That's still a long way from $210,000. Do you know what I mean? So there's a lot of people who it's I don't think it's this devastating thing, but the people who maybe bought some assets in the last 4 or 5 years, yeah. They're probably
like anything. If you bought at the peak of something, and then it goes down. That applies.
Yeah, and I think the bigger thing is that it plays with the psyche, especially now when the whole Western world is there's government chaos. It seems like going around, wars going around. It's who can make it? It seems like it doesn't matter what industry you're in. Before, we used to talk about our industry, real estate investing. If you were in software, the software world. If you were in, some other energy, you were in the energy industry. Now all of a sudden it just feels like it's smashed together, where everybody's looking at like what the Bank of Canada is going to do. Everybody's looking at what the Federal Reserve is going to do. Like we're becoming so centralized because the system is centralized, and it's starting to break at the seams, as the gold and silver prices are clearly showing. Bitcoin's kind of showing that too, that like we're getting the volatility, and the system's literally shaking, and everybody's trying to get like some data to help them understand what to do next. Like, how would you deploy capital in Canada right now, knowing what's going on between the US and Canada? If you were a company that was going to deploy a meaningful amount of capital in Canada right now, wouldn't you just sit on your hands for like a little bit? Like if you're going to deploy $50 million, $100 million, that one company in Quebec, the smelter that was going to deploy $1.4 billion, to do whatever, they decided not to proceed. Like it just shows up in this confidence where people are like, what the heck is going on?
Well, there's no stability. Real estate investing isn't always easy, but it can be relatively simple. And that's where the Rockstar Inner Circle comes in. Look, there's a lot of real estate investing information out there these days. That's why it's so important to pick your sources wisely. And even though investing isn't always going to be the easiest process, it does not have to be super complicated. That's where tried, tested, and proven strategies like the ones that Rockstar members use come into play. Everything shared in the Inner Circle is built from firsthand on the streets experience in the current market. It's all up to date, things that people are actually implementing today. In fact, the ongoing courses are delivered live, so they're always up to date with the absolute latest real life experiences. As a Rockstar member, get ongoing access to over 20 different systems and programs covering things like which properties investors like and why, our private rental system, what opportunities the investors are scooping up in student housing currently, the legal side of investing, why or how to use corporations as an investor, a mortgage class with the absolute latest options and programs to build your portfolio as an investor, because they're different than a regular home buyer. And there's a whole ton more in all those different classes. Of course, to implement all these strategies, members get access to unlimited private one-on-one coaching with an actual human experienced investor, not an AI chatbot, not ChatGPT or anything like that. It goes beyond training classes in real estate. It's a community for people looking to take control of their own finances, to give themselves options and allow them to live life on their terms. With ongoing live and virtual opportunities to connect, it's built for investors by investors. You can see everything members get at rockstarinnercircle.com/member. It's rockstarinnercircle.com/member. Now back to the show.
Yeah.
You don't know what direction it's going in because there's nothing being done. There's no, Canada as a whole right now really has no direction, right?
There's no narrative. We don't have a good story.
Exactly.
Yeah. Like what's Canada's story?
Here's our focus. Here's what we're doing for the next 5, 10 years. We don't have that. And we change. And you know what? We do have some version of it somewhere. I don't know but it changes. The narrative changes every time they need some, it's votes or whatever, and I just want to be, I'm going to say it.
We're going to be very good at
I'm going to anything I say about the government is not and I just want to say this because people are, it's not this anti-liberal thing. I don't care what government would be in power. The way the political landscape switches is any government that's in power, people get tired of. It doesn't matter which flipping government it is. So it's like, It doesn't matter what it is, right?
The debt goes up and the M2 expands under any government.
Yeah, no matter what promises
some might be a bit better at expanding it and debasing it than others, but it just goes up.
And what
was I going to say that on that Canada just needs a narrative. Like Canada right now doesn't have a story.
Well, yeah, are we pro-energy or not pro-energy?
Yeah,
because our regulations really aren't pro-energy. But then we come out with this one announcement, okay, we're going to and not even build the pipeline. It's we're going to study the pipeline. Yeah. And I mean, I'm so flippin' fed up with studies of goddamn everything in this country. Just do something. Yeah. It's about
what are we known for right now? Globally, if you're trying to attract capital from outside, what are we known for that would attract that capital? Right now, it feels like we're known for taxes and regulation, and it doesn't seem like we're known for prosperity or a free market.
Mm-hmm. I'd be interested to know, some of the people that we know that raise large amounts of capital for
we should
different real estate projects.
Yep.
I'd be really interested
let's ask.
to know what they know. What's the foreign narrative for raising capital coming to Canada in that, specifically in the real estate sector right now? I'd be super curious to know that, because I agree. I think there's probably a little bit of a void there. Whereas before, the narrative in real estate at least was like supply, demand, we're becoming a world-class city. If you look at the carrying costs elsewhere, blah, blah, that narrative has obviously kind of fallen apart as populations come down and prices have changed in demand. So I'd be curious to know where that sits right now.
Same. Yeah. I'm sure there's been some change. But you said something else there on Canada. I guess I'll probably pop up.
But so the other thing in just specifically in real estate, what's changed over the last, I guess, couple of years is that with interest rates and prices, is that we're seeing on the streets now like way more options for investors that are like cash flow positive options.
Yeah, real investors are showing up again.
Yeah, but that's what I think real estate investing got so associated with condos
and
almost
quick.
Toronto condos.
And get rich
speculation
quick.
For sure. Yeah, I'm not even including that, but specifically like one segment of the market that all these other segments of the market are almost forgotten about, and they're not kind of spoken about widely. People just look at like the condo numbers and be like, well, the condos, investors aren't investing in real estate because these numbers don't make sense. And we can tell you, we know a number of people. We've had some people on the show, but like specifically even in Toronto, we know that there's been a growing number of people investors going back into Toronto because the numbers make sense again because of the bylaw changes and some of the things they can do with the properties they own. So they're back.
And even in areas like Hamilton where people were going wider outside of Ontario, they're back into Hamilton because you can buy a 3-bedroom house again on the Hamilton Mountain for like $639,000 that you can straight rent and break even. Remember we were shocked. We're like straight rent's breaking even again, which we haven't seen that in like over a decade? Straight rent, or you can do a rent to own on it, or you can do it as a student rental, or you can duplex it. You can legally duplex a legal second suite. So now if you legally duplex this thing's going to cash flow like $1,000 or more. And these numbers we really haven't been able to talk about for a little while. And now they're back. And that's where the sophisticated investors are starting to come out of the woodwork. It's not.
So what's the argument from them? Is in an environment where the prices are likely going to be flat, right? In that asset class, condos maybe not. Maybe there's more pressure downside. I mean, look, they can go up, down, sideways, whatever. But there's not too much. It doesn't look like in the near term there's this upside. The investors are coming and they're buying these assets, and like some people are going to look at them and like, why are you bothering?
Well, I mean, over the long term, they go up. Like we just said, over longer periods of time. Unless you're buying it for 2 years, if you're holding it a long-term rental for 10, 15, 20 years, the history is telling you it's going to go up 6 to 7%, not because the real estate changes, but because the money debases. So these properties go up 6 to 7%. Now on leverage, if you put 20% down, right, and it goes up, let me take the high end here, 7%, that's a 35% return on your investment in that year one. I know as the debt gets paid off and the numbers start to change, but that's the argument. And then you're getting income. So if you can find a property that cash flows, you duplexed it, it goes up, you're holding it for 20 years, the return, because you're only putting 20% down. Like the only thing that's good about real estate, let's face it, is that the banks use it as such pristine collateral still that they lend on it. So it's the actual fact that you can put 20% down and get financing for 80% that gives you like the real leverage. And then if you can offset the risk of the leverage by having a tenant carrying your carrying costs, rents don't seem to fluctuate nearly as much as prices do, right? Some rents, I guess when the condos were really hitting high, they've come down. But in general, our single family home rents, they're pretty steady. Student rental rents have like stayed pretty strong. They've come down from they've barely come down. Actually, they barely come down. Yeah, I don't even think they've come down.
I mean, maybe there were some, not ours, but maybe there were some.
Maybe $1,200 a room went to $1,100.
Yeah, maybe somewhere like if there were, but even I was going to say even higher than that because some are renting for that. But yeah, they're on the very top end of the market.
Well, at Western, when Aiden started, it was $650. When he left, that same room rented for $950. Yeah, right, and it's still $950. But I think the argument is that if you hold these things for a longer period of time and you get the leverage, if your costs are covered because rents don't fluctuate as much as the price of the house, you hold it, you pay things off, you get the leverage, your money's working, you're outpacing the debasement of 8.12% now. You're getting some cash flow. Yeah, in exchange, you have to deal with the tenants, you have to deal with the landlord-tenant board. There's a trade-off. But I think
it's something that isn't taken into account a lot is that the real estate really, if you there are times when it overperforms and underperforms, but if you compare it to the growth in the money supply, really it lines up pretty well. So the actual real estate really hasn't gone up in value very much. If you go back all the way to when we look at the numbers, I think it's 69, but say go back to 1970, so what's that last 50, 55 years. And it's kind of really just kind of held up that way. So prices haven't gone up. It's just the value of the dollar has really gone down.
It's so hard. It's such a hard concept to explain, though. Like, it's so hard for, I think, the general population.
But how is it hard to explain or for people to understand? Because if you just explain it in a way that, look, if you had $100,000 in your bank account in 1970, how much house did that buy you? And if you have that same $100,000 in your bank account today, how much house does that buy you? Isn't that make it pretty clear?
Yeah. Just most people will associate that with the house is gone up. They don't think the dollars in value have gone down. But the purchasing power of those dollars is going down. The bricks and the roof and the wood is like exactly the same. Actually, probably deteriorated a little bit over the 50 years, but it's the same. But nothing's changed with the house, to your point. It's the value of the dollars that are being decimated, but nobody thinks from that frame of reference. It's so difficult. I know, because talking to people, you're like, it's just so difficult. They don't get it. And we're all working for dollars that somebody else at the government level can print out of thin air. So you're working hard.
Unelected. An unelected person gets to decide, right?
Yeah. Which is completely ridiculous. So like, you're working and exchanging your time and your labor for something that somebody else just gets to print magically of thin air and spend on who they want and what they want. Like, that's the system. That's the game. You're working for something that somebody else can print out of thin air. Like, that is the system. It's chaos.
I think that, and I think it's the mismanagement of those.
And then you pay tax.
And that's where the tax thing comes in. I think it's the mismanagement of those funds where, when I speak to people, that's where they feel like, lately that, okay, this is becoming
the whole
problem.
Thing. First of all, your income's getting debased. Then you pay income tax. And then when you spend it, you're paying an HST. If you invest it to try to outpace the debasement, there's a capital gains tax. If you won, if you lost, sorry, too bad. You just eat the loss. I guess there is a tax deduction on some losses, to be fair. But
see the unrealized, what is it, Netherlands? Was it Netherlands?
Yeah.
Unrealized capital gains tax.
But if you look at those dollars, and then listen, if I give you $100 and you do something, I earn $100, I pay tax on it, right? Income. That $100 now, I had to pay tax on it, and it is worth now, I don't know, I paid tax on it's worth $60. I don't know, $60. I paid income tax, right? So I have $60. And then you do something for me. I don't know. You fix my fence and I had to pay you $60. I pay you the $60 that I have left. Remember, I already lost $40 to tax. But now you have to pay tax on the $60 that I already paid tax on.
I don't. You're not going to take a cash.
But think about this. Now you have to pay 40% income tax or whatever, right? 40%. So what's 10,
I get it.
$36. Now we're at $24 or whatever we're at. So now we took $100 and the government through 2 transactions managed to destroy that money and took a huge chunk of it. How many more transactions till it basically goes to zero? The government is just sucking the money.
So you're saying, in your opinion, and I'm going to put words in your mouth and tell me if I'm right. So I'm going to expand on it a bit. It's the mismanagement of the funds because the government has to keep running these deficits. Right. So they're spending more than they're taking in because they're taking in all these tax dollars, but they're spending more. So they need to then keep taking in more and more. So the mismanagement of these funds makes them have to create more money because they need these inflationary forces. And then they continue to tax more and more. And ultimately and mismanage more and more and then create more. And then that's causing in this case, I'm going to go back to real estate. The real estate prices to be where they are, or the other prices we're talking about, and the affordability issues in Canada, basically. Sure. And I know and look, I'm oversimplifying. I know there's supply demand issues and stuff like that, and that creates different markets, and that's some prices will rise faster.
That's an economy,
faster and slower than at other times. But I mean, ultimately, is that what you're saying? Something like that.
But the only change minor change I would say, it's not the mismanagement of funds. That's a second problem. The problem is the dollars themselves are debt receipts. So like the money that we're using is actual debt, but we call it dollars. That's the problem. The problem is that the dollars are debt. So there always needs to be more printed, mismanagement or not. The mismanagement makes everything worse. But the dollars that exist have to be paid back with interest, which means more dollars have to be printed for the system to work. And then there's the mismanagement and everything else you said. So there's like these multiple layers of absolute destruction. Like it's very difficult to win in the game. You need to be an asset owner. It's very, very difficult for somebody who's like in Canada, a lot of us born to me in the 1970s and 80s, you believed you were middle class and you can kind of get ahead. It's very, very hard to outpace 8 to 12% interest, inflation a year and get ahead. You have to beat that. So to get ahead, so for example, if you grow your income by
do you know what the inflation rate, like the M2 growth rate was in the 60s, 70s?
I did that by decades some time ago. I forget.
Was it lower? Do you remember?
No, it was like roughly the same. I have to go look at it. Don't take my word for that. Yeah. I remember looking at it. I'm like, oh, it's like been pretty steady the whole time. Yeah. I think in the 70s, maybe it jumped up a bit. I actually forget. But I did do that by decade. And I was surprised at how even it actually was. But now it's just compound. But these now absolute numbers are just compound.
Yeah, they're so big, so it makes everything.
Well, when we started Rockstar, there was $8 trillion of debt in the U.S. And I remember we put up an economic update that I think in the year 2010, we're like, hey, if this continues, they're going to be at like $16 trillion, 14 or 16. I can't remember the number I said, by 2014 or 15 or 16. So like it would double. And I remember people saying, Tom.
Well, the chart looked ridiculous.
Yeah, they're like,
you took the light and expanded the line and expanded it where you thought it was going to be.
Yeah. And they're like, there's no way it's going to go that. It took the United States of America like several hundred years to get to 8 trillion. They're not going to double it in like another 6 or 8 years or whatever the number was. And I'm like, I don't know. I'm just extrapolating forward. And it did double. And today it's now, and we're in 2026, and it's like $38.7 trillion. It was at 8 trillion in 2008. It's at 38. It's like, so we're like almost at 39 trillion. Like we're probably going to add a couple trillion more this year to the United States debt. And Canada's like, with our deficit, we're just adding on, I don't have our number top of hand. I don't know what.
I forget what they announced.
It's 5 or something like that.
Well, yeah, when you did the math after they announced the budget at the end of last year, it was, it was bad. Yeah. It looked it didn't look good.
Yeah. Yeah. And there was something I wanted to share with you on that whole taxes thing. Anyway, I forget what it was. I'm sure it'll come to me.
So with these affordability, so the questions we get asked all the time then, with these affordability things, issues with prices rising in something like food, which is mandatory, obviously it's a need for people. So then then we look at something like AI, which I don't know what percentage of people really understand the threat to jobs that AI might.
I think most are still laughing at it.
So if there's a, income interruption for people and the prices are all up and the incomes aren't there, then what potentially happens to, I'll go back to real estate again, the real estate market, whether it's purchases or the rental market with this type of scenario. Because if there's not the funds going around to then...
Let me mention for our VIP members, we are doing a monthly AI workshop now. We did the first one in January. We're going to do the second one next week to share everything we're doing with AI and talking about it because it's affecting, it doesn't matter what job sector you're in, it's going to affect all of us. But
I started because we do so much of it within the office. I kind of take it for granted. We're fortunate here because everyone's sharing different things all the time.
We encourage everyone, just use AI.
Yeah, and
don't do it yourself. Use AI.
Well, my wife didn't realize how much, like what it exactly does. So I've had to start sharing more stuff with her so she sees it. And she's like, what the heck? So, and then yesterday I showed her a few things and I showed her how I used it for some of the work that I wanted to get done. She's like, what? Just like this. I'm like, yeah, look how quick it is. She was.
And what doesn't work today is fixed tomorrow.
Yeah, and she wasn't. And she understands. Ask it a question and get an answer. Well, I'm talking way beyond that. This is the part that she didn't understand. That's like now like.
It's gotten to the point where I couldn't get a drawer out of Carol's closet. There was something trapped and I couldn't I couldn't figure out this drawer system. I couldn't get the drawer out. And I'm like, what am I doing? I just took a picture of the side of the drawer with the hinge on it. And I just asked AI, I'm like, I think this one was chat. And I'm like, how does this open? And it starts telling me, oh, that's this system. There's a lever on one side that'll go down. The lever on the other side, you actually have to raise up. I was trying to push them both down. Yeah. And in 2 seconds, it figured it out just by a picture.
That's crazy. Yeah.
And you can just ask it questions. But I think more than that too, Keith was just showing me how he took a screenshot of a website of ours that had improper alignment of one of the forms on a page. And, HTML can be tricky. Different CRM systems are tricky.
It was a form from our CRM system that we were trying to put on the page.
On the web
we
page.
had to customize the look and feel, but it was
the formatting
we just couldn't because it was hard coded into the form.
And anyone who's done any kind of HTML, this stuff's finicky and you can never get things to work. It's frustrating. He said, screw it. He just throws it in. I think it was Claude, and Claude comes back and says, oh, you're doing that. I see the problem. Change this parameter, and this parameter. Done. That might have taken us literally in the past.
I think it did it for him.
Maybe it did it for him, but that would have taken it for us. That could have taken us 2 human days of going back and forth, and maybe even resulting in us to hire some web forms consultant for $150 an hour to spend an hour with us to fix this problem. And now he solved it in 30 seconds for free. That you're paying for Claude. I mean, it's not quite for free.
It took him longer than that to eventually get to that point to figure it out. But But then now he's created a skill for it. So anyone can take, anyone on our team building a site can take the form, put it in that skill, tell them how they want it formatted, and it'll automatically format it.
It's just ridiculous. And this is where, to your point, where are we headed? We're headed to a world of universal basic income where the government's going to have to pay people because people don't realize it yet. And maybe it's because you and I were in tech and we can kind of see it. It just reminds me of tech where people dismissed email. I'll never forget when a lawyer told me in the late 90s or early 2000s, they're listen, you can send email for a lot of stuff, but legal documents, you're always going to need to mail out. You're always going to need to have the blue ink signature.
Really? I don't know if you ever, I either forgot or you ever told me that.
Yeah. They're this is not going to happen. We're going to have to drive. You're going to have to mail it. You're always going to need the person's real signature. How many people have used DocuSign or a million of the other digital signing things? Who has signed a piece of paper? And now if somebody sends you something to sign, oh man, I got to sign it, take a picture of it, put it on my computer. Can't you just send me something electronic to sign with my fingertip?
The property management company for this condo finally last year, because I was bitching and complaining to them forever. I'm like, guys, because they kept sending me stuff by paper to sign. I'm like, guys,
now
look.
You're pissed off.
Yeah. Just figure it out. So, get a DocuSign account. I will pay. Take it off our fees, the $10 a month that you guys need for DocuSign,
And now with AI, I feel like I'm living it all again where people are like, oh, well, Tom, did you notice with that legal case, there was a hallucination with the AI. AI doesn't work. I'm like, you know what? Give it about 18 hours. And that hallucination, if you're not familiar with it, if AI gives you an improper answer or makes up some data, it's called a hallucination, which is obviously bad. But people are seeing that and they think it might take a year for that to be fixed. I'm like, listen, in 18 hours, that what you thought was a problem and the reason that AI is not going to succeed is likely going to be fixed, and it'll be 10 times better than you think. And that's what we've been seeing with all this stuff. When you ask it questions, and now if you embed the AI into a humanoid and the AI starts walking around, that's the freaky thing. Keith was showing me he has a Google phone, and Google has on Gemini on Google phones has that Gemini Vision or Google Vision where you can just show it your fridge and say I want to eat something good, and it'll look at the ingredients and say okay, make this. Or he said where are the eggs in my fridge, and it zones in and shows him the eggs. That's the AI that's going to be in a humanoid. So you're going to literally have a humanoid that will open your fridge, and you're going to be able to say, use the ingredients that are in there and make me a chef, a dinner as good as some Italian chef would make in Italy. And because all of this is...
You mean give me the recipe, not make yet.
No,
you're probably not talking about. Okay. But what's the time frame you're thinking for that?
2 years. 2 years. Get these things out. I mean, my friends on the person, I don't want to say his name. He's on the Tesla, what's the name? Humanoid. What's their humanoid name?
Oh, Optimus.
Optimus. Line. In 2 years, okay, maybe not everyone's going to have them, but some people are going to have them.
I don't think they'll be cooking meals from raw ingredients.
He says the hand dexterity is getting super complicated, but super ridiculous. I don't know.
Maybe, but
I'm not saying everybody.
But it doesn't matter.
Okay,
right now, it can do it. It can give you the recipe.
Sure. Okay.
And you can do it yourself.
But I'm just saying, okay, give me 5 years. The thing opens your fridge and just makes you a chef, a chef grade meal. It will clean up. It will scrub your toilets. And then how soon are we till it does surgery on you?
Yeah. So to bring...
I'm saying it's one robot. that's going to do everything.
I understand. So, but that's massively deflationary.
Yeah.
Because the cost of everything, even the surgery, right? So if these robots can all of a sudden do surgery, the cost of that surgery drops dramatically if you don't have to pay the surgeon to do, you know,
the hospital or
the
the
surgeon
insurance company.
or the nurses that are there or whatever. Like all of a sudden,
I know.
And so if we're going back to inflation and deflation, the deflationary forces from this are very big. Not to mention, you use the legal example, right? You know, a lot of real estate transactions, to close a real estate transaction, it's kind of templated.
Yeah.
I mean, there are more complicated ones for sure, but the average one is pretty
Sorry,
straightforward.
Jerry. Don't tell Jerry. Sorry, Jerry.
Yeah, but there's not too much. There's not too much to it, right? So. Then and the fees there are, you know, the lawyer's fees are
they're actually not that bad.
1,000 plus disbursement. It's called, I don't know, a couple thousand, but whatever. But then all of a sudden those fees get compressed as well.
Yeah.
Because if I can get this robot thing to do it, why
that knows all the laws in Ontario and does everything by the book and doesn't ever make a mistake.
So there's two questions to this then that I'm going to think about. One is obviously the deflationary forces and that are big. So let's park that for a second and come back to the deflationary side. Where I think what's going to be interesting to see is any of these industries, real estate's one, with these governing bodies. Lawyers are another one, you know, and they're out to protect. It's all no different than the dairy cartels. They're out to protect their people. Is it, you know, how hard is it going to be to infiltrate there and allow that technology to do that? Because they're, you know, because the argument's going to be like, no, hold on. We're not going to let it do that. You can't use that in Ontario. You can't use one of those robots or an AI to prepare the documents and close the transaction for you. It's not legal.
Sure.
You have to use, you know, a member of the bar or whatever. Yeah, you have to use a lawyer. Because that's gonna happen for a period of time.
But technology to me is undefeated. So like you need universal compliance, because if you're going to remain competitive, you better hope there's not one guy that's saying it's a human across the street, but that is using AI to do it. And all of a sudden his fees are half of your fees. And you're either going to have to live with that or somehow prove he's using or she is using humanoids, or you're going to do the same thing. So like to me, technology is... I don't know a case where technology has not steamrolled some industry. Okay.
So then that goes back to the deflationary forces then, because you talked about earlier about the challenges in our current financial system with deflation, the problems that it causes. Now we have
like it can't happen.
Okay. So now we have technology coming in that's looking to then that potentially can be forcing
prices lower.
Incomes probably lower. in a way that we've in our lifetimes for sure we've never seen before.
In anyone's.
I didn't know when the automation came out, like assembly lines and things like that.
Sure.
There was the Industrial Revolution like that during that time. I don't know, but whatever. But
sure.
Right. Yeah. Maybe now, because such a percentage of the workforce now is going to be impacted by this, whereas probably a lesser percentage was impacted.
Well, I think that was farmers, like Industrial Revolution. I like Adam Livingston when he breaks this out in The Great Harvest. He'll say that the Industrial Revolution replaced muscle and bone. Right? Factories replaced muscle and bone, and now AI. And so what was replaced is you went to university to get a magic talisman degree that said, oh my God, I got this talisman that tells me I'm worth something because I got this intelligence from this degree. And all of a sudden AI now, so that's where people fled to, because the Industrial Revolution replaced muscle and bone. Intelligence wasn't really replaced. Now that we're replacing intelligence, and everyone's who's been going to university, now we're replacing that too. So now we've replaced muscle and bone, and now we're also replacing intelligence. Mm-hmm. I think it's massively deflationary, and you can't have prices come down in a system.
We're not replacing it. We're devaluing it because it's going to be so accessible.
Sure.
You're not replacing intelligence.
Well, to me, you kind of are, because like instead of hiring 3 humans, you've replaced those 3 humans with AI.
Okay, if you're looking,
I get it. Like maybe it's semantics.
I just mean humans aren't going to be stupid now. Like you know what I mean.
I do find sometimes when I use it that maybe I am getting a bit stupid.
Well, probably
because sometimes I'm like, because I would do math. I can do math in my head fairly quickly, and I've noticed sometimes now I'm like, I'll just throw it in AI. Why
Well,
am I trying to do
it's like
that?
a muscle, right? When you don't use muscle,
totally.
it becomes, you lose the peak performance.
Yeah, yeah.
You might still be able to use it, but you just lose
But I find that's what's like, and I have that one AI for email subject lines where I'm like, hey, what's a good subject line? Whereas before I would write out 3 subject lines, and now I have it trained the way I like it. I'm like, oh, don't even think. Just put it in here. What's a good subject line? And give me 10 options and I choose one. But
the difference is it's still important. And this is where things get interesting, because it's still important to understand the results so that you can evaluate them and make sure that they're going to be effective for you or what you wanted.
Totally.
Whereas my concern is, and I'm sure there'll be a fix to this because you can make this argument for anything. The concern is, what about someone that doesn't have the underlying, foundational principle, the knowledge of the principles you're after when you're putting this stuff into AI? Then where does it go?
I think it'll just solve for that too, because let's say I know copywriting better than you. So like I'm a better marketer because I can use AI, but I have the foundational knowledge of copywriting. If someone who doesn't sends something out and it has a crappy open rate, they can just ask the AI, hey, how do I get this open rate to be better?
And then they'll learn over time.
They'll learn over time. So I think the AI is going to be the best teacher and instructor. But to your point on deflation, as things get cheaper and cheaper because of AI, and we live in a money system that requires, like we've been talking, debasement and inflation of the money supply. Like it literally requires it because of the way our money is debt, and it comes into existence with interest owing. So we can't have the money supply shrink. Otherwise, you literally run out of dollars to pay back all the debt. You can't have this. So if prices come down and there's less and less like money being pulled into the economy, the debt hasn't gone away. So now you actually have to send out more money and more checks and do all this funny stuff with money to get more money into the economy because the economy is shrinking as deflation hits. So like you can't have it happen. So now we're looking at the prospect of productivity being so great that it's not like good. Like a lot of economists are stuck so much in the 1960s and 70s. They'll say, well, Tom, productivity is amazing because if more washing machines come off the line per hour than it did last year, the economy is growing because we're selling more washing machines. Yeah, but that's only if the demand exists for the washing machines. And you had the baby boom generation that when that was happening, the demand was like through the roof. Now the productivity is getting so good that if you create 1 billion washing machines, who's going to buy all these washing machines?
Well, yeah, just think if you had robots making things, so, and they could work just 24 hours a day, all of a sudden the supply of everything doubles because, it would actually, in theory, it would triple because if right now the factories are open 8 hours a day and they're going to 24.
Maybe more with no lunch breaks or sick days or vacation.
But let's say it triples all of a sudden. Well, then, who to your point, how many washing machines do people really need?
So now we're looking at a future where if we know that's coming, or if you think at least the probability of that is not zero, how do you protect yourself from the inflation that must happen to keep the dollar system that we're living in alive in a system that is deflationary? This is like what Jeff Booth talks about all the time, and it makes you realize like, you better own some freaking scarce assets. And it's why a lot of people are going to commodities, energy. It's why we talk about Bitcoin all the time. It's why gold is doing what it's doing. Like you bet, and it's going to be volatile. Like look what gold moving $1,000 in a week or whatever it did in January or whatever it did, a day or 2 days.
I talked to the guy that we know that deals with the commodities and gold and stuff. And one thing I said to him, like, I can't believe the way, it's moving. Like the price is moving up and down. He goes, I've never seen that before or something. He's like, and his response was, nobody has. It was by text. That was it. Nobody has. And I was just like, yeah, okay. Yeah.
Like silver going up like $80 in a week or whatever it did. And like,
it dropped like $25 in like an hour or something.
Yeah. And then gold came down like $500 in a week. And I mean, that's that Weimar Republic chart where gold goes up like cleanly, but the rate of change is like, all zigzag, like it's volatile. I feel like we've entered our volatility stage. And it's what we've been talking about with Rockstar members for a long time is that like we're in the decade of volatility now. Like you better, this whole volatility of everything, you just better get used to it. This is not going away. So you have to study now to decide what assets you want in your life that are going to survive this era of, to me, massive incoming increase of the money supply to keep the system going in the face of AI that is destroying the moats of software companies. It's why software has been suffering on the stock market in the last few weeks. AI is like proving to people like, oh, they don't really have a moat around their business like maybe we thought they did. They can be duplicated.
What about the people that will say, well, that it doesn't make sense, like the real estate can't, gold has gone up, what's it up now, 150%? No, a little bit less, 100, whatever. It's
Okay.
Let's say let's just say it's doubled. Let's say it doubles again from here. So it goes up, it ends up going up 300% in the next 5 years, whatever, just as an example. And then people look at real estate, they're like, well, hold on, that doesn't make any sense. Like real estate an asset like that can't do that because it can't go from $500,000 right now to 1.5 million because who's ever going to be able to get their service for that? You can't sell it.
Yeah.
How can you rent it for that number? So that it doesn't equate the same way.
Sure.
What do you say to those people?
It has nothing to do with the real estate. If you flush a new billions of new dollars into the economy and you extend the amortization, so the payments are really low and you have 100-year mortgages instead of like 30-year mortgages, you can make anything work.
Yeah. And what we've seen elsewhere is what happens is specifically if you're talking Canadian dollars in this case, because the Canadian dollar has been doing it's been doing pretty crap against most other major currencies around the world.
Yeah. It should, as we enter a commodity cycle here, you'd think it starts to do a bit better.
Remember, we don't.
No, I know. We don't have a story.
We don't invest in our country. Okay. And then, I'm just using it as an example. What would happen in that case typically, because they wouldn't be able to service the Canadian dollar debt or anything like that. So typically it gets revalued against something else that's better. Right, because we've seen that in Croatia, where for a period of time they weren't using the local currency for real estate, and you've seen it in other places too. Venezuela,
Croatia was using Swiss franc mortgages,
right? And still, even before they officially started using the euros, they were doing things in euros too, right? So that's typically what happens, and then it kind of you try to kind of make things work that way instead of trying to service the $1.5 million debt. It kind of changes that thing, because what can happen in extreme cases is if things get really bad, the real estate market kind of freezes up because
there's no credit,
right? Yeah,
highly sensitive to credit,
and then they revalue against something else, and that's just what's happened elsewhere. I mean,
because the house has value. There is value in the bricks, in the roof, and stuff. But if the dollars go to no value, when you introduce a new currency, it'll be priced in some new currency that has a certain value. But
just like other things, like we were talking about gold and silver as well. Yeah. I'm just saying, gold and silver you can sell a smaller amount and usually transact still. Some way versus like a larger asset like a real estate. That's what I'm talking about.
One thing in this whole cycle that is sad to me is that, everyone can get so caught up in living their daily life and paying your bills that it's kind of like, boiling a frog in a pot, that like if you're in Canada, you're just trying to survive. So they could be debasing the currency and things around you are getting expensive, but you don't realize your purchasing power measured against things like the US dollar or the real or the euro could be losing value even faster, so that you're trapped in a country. You can't even get out if you want to get out because your net worth and measured against other things or other places, whether you want to go to Singapore or Dubai or somewhere in the US or South America. Like it could be that what you thought you had in purchasing power when you get the Canadian dollars to sell your assets and then look around the world, because you've been living in this weird place where you're not really universally using the same currency, you could maybe get almost nothing.
No,
that's the sad part. And we saw that because when that happened to our relatives in Croatia, when the hyperinflation hit in the 1990s, that's basically what happened. The middle class lost any of their purchasing power.
Well, I was surprised to see that how poorly our Canadian dollar is done against the Mexican peso. Like I think most Canadians will kind of monitor the US dollar a little bit, like the strength against the US dollar, right? But to look at the Mexican peso and see that we've done poorly against the Mexican peso, that surprises people. It surprised me when I looked at it. And then I recently...
Especially growing up in the 90s because we were like dominating the Mexican peso.
And last month I had to go get a bunch of a chunk of euros and send it over to Europe.
Yeah, what was the exchange?
I forget the number, but it was 10% worse than last year.
Yeah.
And not even last year, last summer. It was 10% worse. I remember looking, I'm like, this sucks. No, not 1.5.
1.6.
1.6. Yeah, well, yes, I think it's something like 1.6. I think, no, maybe 1.6. Yeah, I forget. Anyways, but it was bad. And I'm like, and so I looked up the chart. I'm like, what the heck's going on?
That's the frog boiling in the pot to me.
I know, but you don't see it because you're not seeing it every day. And that.
And then you put your trust in the people running the currency in the country. But if they really break that trust and print a lot of money and do these deficits like they've been talking about, doesn't matter which government we decided, right? Then all of a sudden they're ripping you off and they're trapping you in the country. And a lot of these politicians have assets in other countries. And so they themselves are not trapped in the country, but they're pulling the strings in the country, and like they don't have their assets in the country that are pulling the strings on. You're like, wait a second, what the hell is going on here? You know, it's kind of like the whole agreement that you had going to school, getting the good job. It's like, oh, was I just like fed this line? Like I make an income that is debased. Then when the money I do get, I have to pay tax on it. Like we said, income tax, consumption tax, alcohol tax, gasoline tax, carbon tax, all these taxes. Like, what's really left for you?
There is a lot of tax.
There's a crazy amount of tax. But the fact that the $100 that I earned in that example is taxed, and what's left, if you earn it from me, it's taxed again, Nick.
So, yeah, and we got, yes, I understand. But there's an interesting, what's recently happened. If you look at what happened in New York, Mamdani just came out and they want to increase property taxes, right? And if you look at Chow just said the same thing. Hers was a few weeks ago, last month, whatever. They want to increase property taxes in Toronto again to make their budget. So they're always increasing tax. And then if you look at the signposts, so if you look at that, like we mentioned, the unrealized capital gains tax, that
is that Denmark, Norway? Netherlands.
I would say Netherlands. But I could be wrong. But I forget.
That's awesome.
But it's only past. It's past one layer of government. But it's like basically like the House and the Senate type thing. But they've basically passed the House, but the Senate's controlled by the same party, so they do expect it to pass. So, but it hasn't officially passed both levels yet. But it has passed one. But they're both
unrealized.
The same party. Unrealized capital gains. Those are signposts because very often something that happens elsewhere when that type of thing comes in, it's kind of like a trial almost. Like other countries are looking like, oh, how can we kind of get away with this too? Because look what happened with recently when in Canada when they announced the increase in capital gains tax here. Right, it wasn't unrealized capital gains,
people scrambled.
But they were looking at increasing capital gains tax here too. So it's like the number one solution. Remember, the government has no money. That's what people don't realize. They're like, well, the government is funding. Yeah. The government has zero money. Yeah. It only has taxpayers' money.
I saw somebody say that. They said, oh, we're watching the Olympics. It's like free on CBC. Yes. I'm like, CBC is not free for anyone listening.
Yeah.
It's not free.
You pay for it.
You pay. We all pay for it.
It's probably the worst deal you get with the amount you pay and the amount you actually watch on CBC. But that just
goes to like how thick the scam is. It's like people don't even realize. They just say these things. Like the government will take care of it. It's like, well, where does the government get money? It's going to take it away from one person and disincentivize them from really working harder because it's taking away from them. We're literally watching Atlas Shrugged, especially with the unrealized capital gains tax that we're talking about in Netherlands. Atlas Shrugged, that book. Yeah. We're literally watching it play out in real time.
Yeah. And for real estate investors, the property tax thing and the jurisdictional risk is something that has grown over time. Like when we started doing this, whatever, was it 2008, 2006?
2008.
When we started doing it then, that
2007 was our first full year, but we hadn't incorporated Rockstar. That's when we were at another brokerage.
Yeah, end of 2006 was when we started, like September, October. Yeah. So, and then we...
holy shit, that means it's been 20 years, no?
Yeah, later this year.
This fall.
Yeah.
Holy shit.
A lot of hair loss since then.
Holy shit. A lot.
But
I still have a lot of hair on my hands, though. Transplanted from my hands to my head.
Jeez. But the investors have to pay attention to jurisdictional risk.
Yeah.
Because if you're in a city,
but where's the jurisdiction you go? There's no jurisdiction to go to.
No, I know, but I'm just saying, like, there could be some that are better than others, even in the short term.
Absolutely.
But it's something that you got to be aware of. Like, you really do.
Yeah.
And it's something that's probably going to become more important as time goes on when you're making these decisions. Whether or not you just want to pull out of an area completely, pull out of real estate, whether or not, or you want to pull out of one area, go into another area, it's going to be something you're going to want to consider.
What's the probability of this happening this year? These autonomous AI agents really took off in the last 2 years with OpenClaw and the Moltbots or whatever they renamed them to. But these autonomous agents, for anyone listening, they kind of run around and they just work 24/7. You give it instructions and you can give it like your credit card information or your Gmail login. Like it will complete tasks for you. It doesn't operate like a search. You tell it to do this task and it'll just work until the task is done. And people are spinning up all these autonomous agents. What happens until there's when later this year, what's the probability of later this year, there being some like massive agent swarm attack on a financial institution in Canada that forces the government to like freeze the banks for a couple days because it's like, oh my God, like we just need to get this under control. Everything's safe, like your money's safe and stuff. But like we got like attacked. It's not like a denial of service attack like back in the day where the website's just down because someone's like pinging us really hard. This is like a little bit more serious than that. There's like people like aggressively trying to hack into our systems. So we're going to have to shut down access to the banking system. But don't worry, everything's safe. But you know what? When we turn it back on, we need to know you're not an autonomous AI agent. So we're going to have this new digital ID where you just log in with your bank ID, but you also give this other token, which is your ID token or whatever, to log in to prove you're not an agent. And that's really for your safety so that like all your net worth isn't like stolen or disappeared. So everybody's then like, oh my gosh, like I have to do this. So what do you think the probability of what I just described, not in happening, because I feel like I know that's going to happen. I'm saying this year on a 0 to 100% chance. Is it like 0.5%,
yeah,
under 5, under digits. 10? So it's okay. So it's under 10, under 5 or under 10?
Under 5.
Under 5. Okay. But it's not 0.
Well, no, you can never, it's hard to say 0 to almost anything.
Well, yeah. I mean, I still haven't seen an alien. I don't think an alien's coming in 2020. Well,
you're going to say 0%. Yeah. but
yeah, okay. But I think it's higher. I think it's like up to 20% chance of this year something happen, and maybe we're.
But I'm saying it's less about the. Like you're using the narrative about the bank thing, and I think that could be used for something, which is really interesting to think about because it would force everyone to get a new ID. Well, any major changes they make is always for your safety.
Yeah,
right.
Yeah, so and that would be a great story. Do you want your RRSP or not?
Yeah, so that's an easier way to do it. I think digital ID is coming. I think the probability of digital ID sometime in the relatively near future, I think is like above 80%. Yeah. So I think that, but where you're starting to see it be implemented now in other areas is just with to access things online, specifically like even social media. Right?
Sure, because you need to scan your driver's license
for your safety to make sure that certain people can't say certain things. Minors can't use it, because they'll use the minor thing to protect the kids. Because who's going to argue against protecting the kids?
Yeah.
So it's like, okay, to make sure that they, to protect the kids, everyone's got to get this digital ID to do these things, certain things online. And who's going to be the bad person? Well, I don't want to protect the kids.
Yeah.
So it's always a narrative. And then it always leads to more control. And once they get a little bit more control, it never recedes. I don't know if anyone's noticed that. Like it never disappears, right?
Yeah.
So.
Yeah. And I think right at the beginning of all this, you're like, how do we unwind from a lot of the situations? And the thing is, unless we have more of a free market with less regulation and less government interference and let things just happen naturally so we can, and then we use a good sound money that can't be printed into existence in a free market, this is all going to perpetuate further. So we can't enjoy the benefits of productivity that should be fruitful and should allow all of us to have more savings and more free time and more freedom and more time with our family. Like this beautiful future that should exist. It's going to be a bit of a turbulent, and maybe we get there, but like the turbulence to get there as the old powers hang on, the old banking system, the old politicians, and they all hold on to this. It's going to be rough for the next few, unfortunately.
Yeah, but you can so yes, I agree. At the same time, you can be more independent in the way that you
own
choose
the right
to
things.
live.
Yeah.
The way you, whether it's owned, just do what,
absolutely. You can live life on your terms. It can happen. Yes.
Yeah. This
absolutely.
Stuff is, if you're in the city, it's maybe a little bit more kind of prevalent, but you can be out.
You can even live in the city. You can live in the city and live life on your terms. If you change what you use as your like asset base or your money, you can be what you want to be.
And just focus on doing what you need to do. Don't get caught up in it.
No.
I think that's what happens. A lot of people I see, they get caught, they could potentially get caught up in this and be like, oh man, and it just kind of like drags them down.
That's the amygdala taking over the prefrontal cortex and just saying, focus on the fear, which we're all very good at. You know what I mean?
Yeah. But I just want to say that because there's all sorts of opportunities. This doesn't have to drag you down. It doesn't have to anything, but it's interesting to look at because it's the dynamic that's really shaping a lot of things that impact us every day. But it's probably in my opinion, it's the biggest force that impacts us every day that is least spoken about.
We should do another episode on this and just on all the positive stuff coming out from all of this. Because a lot of these changes, like a lot of what AI introduces to you, there's going to be a person who's really going to build a company and have pure financial freedom in the next 6 months, all built by themselves with autonomous.
There's so much opportunity.
There's so much opportunity to take AI into companies owned by people our age who don't know anything about AI,
100%.
and you can be an AI consultant, and you can be, because if you're just like 60 days ahead of everyone else, you're like you're light years ahead.
That's to me that's the lowest hanging fruit
agreed.
for anyone. That's like when
somebody can be an AI consultant right now.
Yeah, if you were the first person that understood HTML and you could go build a website for
remember
a company,
that era?
Right? And
we were building databases. Me and Dennis were building databases for people.
But no one needed a website. No one thought they needed a website. And then all of a sudden something happened. People are like, oh, maybe I should get this website thing. And then how many HTML programmers were there at that time? Oh, it just exploded. There's all sorts of
How many certified Oracle database administrators?
Yeah.
Windows NT. What was it? Windows NT certified? Yeah. Windows NT certified? Remember there was a Windows NT. It was
MSC.
Microsoft Certified Engineer?
MCSE.
MCSE.
Yeah, Microsoft Certified Systems
Engineer.
I remember that.
You're an MCSE.
Yeah,
remember that?
Right, yeah.
In Windows NT, what's the NT stand for? I think it was New Technology or something. New Technology. I thought
we should start the OpenClaw certification right now.
Yeah. And that's the thing. If you're listening to this, you can't go to university. Everyone's on the same level. Just kick off some AI and start asking it how to teach it.
But that's the best part about it.
Yeah.
That's the best part about
We're all on the same playing field. Everybody.
Yeah. Like
every industry.
And if you know, for anyone that was arguing, you know, or that's a believer in kind of, I don't know if human rights is the right term, but just equal opportunity for everyone. It's like some kid, as long as
on a phone,
internet access in some small village somewhere
the app
in the world,
I was able to build on my phone.
Yeah.
On my phone.
But they're competing now against some, a wealthy kid that's growing up in New York.
Yeah.
They can get access to the same information, the same tools.
Yeah.
There's not this barrier
and
anymore.
now with things like stable coins and Bitcoin, you can have the money that's globally moving around the world.
Yeah, well, Well, stablecoin, the number of stablecoins, and I know we got to wrap, but the volume of stablecoin settlement in January was multiples of what it was.
Yeah, I know USDC.
All of last year. Yeah, I forget them.
USDC, which is one of the big stablecoins. It's not Tether. It's the other big one. It did last year. It did $33 trillion in volume, and in January of 2026, it did 10.
Oh, is that what it was?
Yeah.
Okay. So I thought it was multiples. It did all of last year. So I misspoke.
Well,
but
it's on track.
No, yeah.
It's on track to do 120 trillion.
No, it's still amazing.
Which is multiples of last year.
Yeah.
But the thing is, I don't think it's going to do 120 trillion.
I think it's going
to be more.
Yeah. Because once you start using it, there's no turning back.
It's so easy.
Yeah. Anyway, so we'll wrap it at that.
We'll wrap.
Thanks, everyone.
See ya.